Welcome to the video on the India FinTech revolution. We'll be providing macro and market intelligence, covering the digital payments ecosystem, Bank Nifty strategy, and options intelligence. Our journey begins with the India FinTech and digital payments landscape, followed by the India macro snapshot and RBI policy and rate trajectory. We then examine global macro headwinds, market structure, Bank Nifty technical view, trading strategy, and finally, risk factors and disclaimer. Starting with Section 01, India's FinTech and digital payments landscape. We will cover the rise of UPI, wallets, digital lending, and the overall ecosystem size. The Indian digital payments ecosystem is rapidly expanding. The market size is projected to grow significantly, driven by a high CAGR. UPI is dominating the transaction volume, with over 500 million users. Moving to Section 02, the India macro snapshot. This section examines GDP, CPI, fiscal metrics, trade balance, and the labor market. The macro snapshot for FY26 shows a real GDP forecast of 7.4%. CPI inflation is projected at 3.21% and WPI inflation at 2.1%. The CAD-GDP ratio is a moderate 0.8%, with forex reserves at approximately $640 billion. Observing the inflation and GDP growth trajectory, we see fluctuations over the periods shown. CPI inflation, represented by the red line, and GDP growth, represented by the teal line, show distinct trends. Section 03 focuses on the RBI policy and rate trajectory. We'll discuss the repo rate, liquidity measures, policy stance, and the outlook for FY27. The current repo rate is 5.25%, held by the MPC. The RBI has enacted a 125 basis points cut since February 2025 and is currently in a pause mode. The next cut is anticipated in FY27 Q2-Q3, should inflation remain below 4.5%. Section 04 addresses global macro headwinds. We will explore the impact of the U.S. Federal Reserve, the dollar index, crude oil prices, foreign institutional investor flows, and West Asia risk. Key headwinds include the U.S. Fed funds rate leading to capital outflow and the dollar index causing INR depreciation. Crude prices and FII equity outflows also pose risks, while West Asia conflicts maintain a risk premium. Section 05 covers market structure and breadth. We focus on the Nifty 50, Bank Nifty, sector heat map, and market breadth indicators. The Nifty 50 is currently bearish, while Bank Nifty is cautious and Sensex is neutral. India VIX remains elevated, signaling high market volatility. The sector performance month-to-date shows mixed results. Section 06 explores the Bank Nifty technical view. We will analyze critical support and resistance levels, as well as technical indicators like RSI, MACD, PCR, and max pain. Key levels show strong support at 48,667 and critical support at 50,105. Technical indicators such as RSI, MACD, PCR, and the VWAP trend show a predominantly bearish outlook for Bank Nifty. Section 07 covers the trading strategy and scenario matrix. We'll look at bull, bear, and range scenarios, option structure, payoff, and risk rules. The Bank Nifty April 2026 scenario matrix outlines strategies for bull, bear, and range markets. Each scenario specifies a trigger, target zone, stop loss, option strategy, and estimated probability. We review the options payoff profile and essential risk management rules. These rules include position sizing, stop loss strategy, time decay management, open interest watch, liquidity considerations, and review points. Section 08 is dedicated to risk factors, data sources, and the necessary disclaimer. Key risk factors include crude oil spikes, INR depreciation, geopolitical conflict, FII outflows, and U.S. Fed hawkishness. We also list official data sources organized by reliability tiers.